Brian Livingston, boy, it's been a long time,
nice
man.
seeing you,
We go back to the Windows days, and you know, for those watching, take just a second to introduce yourself and you know what you did with Windows Secrets, and then we're going to talk about what you're doing today.
Yes, I have 11 books
Yeah.
called Windows Secrets with various co-authors. Windows Vista Secrets, Windows 95 Secrets. It goes all the way back to Windows 3.0.
Right.
And I had a newsletter called the Windows Secrets newsletter, which had 400,000 subscribers when I sold it in 2010. Now I'm very excited about this new technology, which has nothing to do with Windows.
Yeah, and so let me get this straight, that you went through the whole Windows era, which makes sense. You're based in Seattle, and so now you're on to something new. So what are you doing today?
Well, I wrote about Microsoft Windows for 20 years.
Yeah.
That was really fun, but I've found that money is even more interesting, and more people
fun.
are interested in money than are interested in how Windows works.
Right.
So I have worked as an investigative journalist for almost 30 years.
Yeah.
And I find that Wall Street is so much dirtier than Microsoft that it really gives me something to dig my teeth into when I'm investigating Wall Street.
Yeah, exactly. And so you have a new newsletter coming up, and it's in Q3. We're in Q3 of 2018 right now. So let's talk about that. That's September 1st, your new newsletter?
Yes, we're going monthly with a publication called the Muscular Portfolios newsletter.
Okay.
What we've found through investigation is that people are getting charged 1, 2, 3, 4% of their life savings every year to have their money be managed by Wall Street banks like Goldman Sachs that are not providing them with good performance. Goldman Sachs house funds have been shown to have the worst performance of any of the major Wall Street banks. We show in the Muscular Portfolios newsletter how people can take their money back and manage it themselves in just 15 minutes a month without paying any fees to anyone. It's totally free financial technology for the first time.
And the personas of your demographic, I'm just trying to picture this. Would it be a young tech person at Amazon and South Lake Union who has a little bit of some shekels to play in the market with? Would it be retired Microsoft? What's your demographic that would read this newsletter?
Well, everybody is interested in money. And I'm glad of that, because if we don't have any money, we don't buy food, we don't have groceries, we don't have a house. So anyone who has a 401k at work, or they work for a nonprofit and they have a nonprofit sharing arrangement, or they have an account with their government employer, or they have an IRA, or they have a Roth, any of these things, you don't have to pay anyone else any money to manage that. We have everything on the website that shows you how to just spend 5, 10, 15 minutes a month.
15 minutes a month.
Moving from one kind of asset to another without day trading or trying to decide what's going to go up in the market. Everything is fully disclosed. We know from people who've won the Nobel Prize in Economics in the 21st century, very simple rules. This is what has a tendency to go up, and this is what has a tendency to crash. When the market crashes 30, 40, 50%, people lose hope and they throw in the towel. They sell everything, they go to cash, and then they miss a big bounce that happens the first year after a bear market.
Absolutely.
And we want to prevent people losing that kind of money. And so the model portfolios that our computers show you never lose more than 18%, 20%, 24% at the absolute worst crash that you could have in history. We want to keep people's losses down so they stay fully invested in something at all times. So
Brian, I have a question. You've talked with Muscular Portfolios. You seem, correct me if I'm wrong, but you seem to be talking about the sort of traditional making money with prices going up. Do you have advice on selling short and capitalizing on bear markets? Because I think that's a completely valid portfolio, and it provides liquidity in the market. So as one of our speakers at S&B Nation said, bulls make money, bears make money, and pigs get fat.
That's right. So well, we don't say...
Do you go there?
No, the science shows that shorting doesn't really help you. It's very risky. You can lose a lot of money. What we find is that when you change from a bull market to a bear market, certain things go up. Stocks go down in a bear market, but bonds go up, commodities might go up, precious metals might go up, real estate might go up even when the market is crashing. And so you just want to gradually move your portfolio into the things that are going up and stay out of the things that are going down. That's really the whole secret. There's nothing that is very tricky about this.
And maybe the last question then would be, is that what we call, and you know, I'm a lay person, but is that sort of a sector play that, boy, you know, property management companies tend to do well in a recession because they have to manage all the properties the bank takes back, so they make money actually, right? Because you can't let water pipes burst in a shopping mall that's been vacated. So there's counter-cyclical sectors. So is that what you're kind of getting to sector plays?
Well, not everything goes down when the stock market is crashing.
Right.
That's the thing. There are other kinds of assets, which could be real estate, could be commodities, could be bonds, and the science shows that if you stay away from the things that are going down and you keep your money in things that are going up, you do much better in the long term. And we show that
and you heard that here first,
people should be able to make a double-digit return on their savings. That would be 10%, 11%. That's a reasonable amount to expect to get, but people aren't getting that because they're paying these 1%, 2%, 3% fees. They're getting taken by wealth managers who really aren't doing a good job for them. And that's what we'd like to correct, is people should be able to manage their own money. Like, once upon a time, you didn't know how to ride a bicycle, but you learned, and now would you pay somebody to ride a bicycle for you? No, it makes no sense. Ride your own bicycle and keep your money, and don't pay anyone any fees to manage your money.
And I've got your URL on the crawler at the bottom of the screen so people can learn more about you and subscribe, but go ahead and tell the audience, where can they find out more information?
We're at muscularportfolios.com.
Okay.
The newsletter is free. The information on the website is totally free. I'm not a wealth manager, and I don't want your money. I want you to learn how to manage it yourself without paying anyone any fees.
Well, it's been a pleasure to catch up in the dog days of summer. I mean, it's been too long. You know, we go back to the Windows era, and I guess I better jump on board with the financial era. So thanks for stopping by Bainbridge Island. This is cool, man.
Yeah. Very nice to be here.
Thanks.